welcome back our viewers. As we have promised earlier, that we are going to talk today about Egypt and its economic cooperation with the African states. We have witnessed recently the three economic blocs agreement which was signed between 26 African states in the Red Sea resort of Sharm el-Sheikh. How this agreement could help in boosting more cooperation among the different African states? Could that open new venues of industry in Africa to have more export to the West and to other states outside of the African continent? To shed more light on the issue, we are very much delighted to have our dear guest, Dr. Mohamed Fouaad, the economic expert. Hello, sir, and thank you very much for being with us.
Thank you and good morning.
Hello, sir. Sir, do you see a new page in the economic relations between Egypt and Africa?
I think we are about to restart the relationship. This is not the first time when we have attempted to do this. There has been an attempt in 2008, another one in 2011. However, I think this one comes at a very crucial time, specifically after several agreements concerning the Renaissance Dam project. So it comes at a very crucial time in the time of the relationship between Egypt and Africa.
So do you believe, sir, that you have kindly mentioned that there have been several trials before to boost the cooperation among the different African states, and especially Egypt and the African states. But we did not see any tangible, any real cooperation or increase in the level of cooperation on the economic level between Egypt and the African states. We have witnessed a signing of an agreement between 26 African nations, which is a huge number of states. So can we feel actually the reflection of that on the ground?
The short answer is no, not in a very short term, because let's just give a little bit background to the viewers of what the agreements are. The agreement, which is between 26 nations, spans three economical blocks. So the first block is the COMESA, the second block is the South African Development Community, and the third block is the East African Development Community. So the 26 country agreement will still need to be ratified by each of the country's parliament. So to put this framework agreement into action, they're eyeing 2017. But nevertheless, in the two attempts which have been done previously in 2008 and 2011, we have not reached this particular stage that we are. So let's say we're cautiously optimistic about what we're seeing here in terms of the development. However, the market that we're eyeing here is by no means a small market. We're eyeing a market which spans about 60% of the continent's surface, creating a new market for 590 million consumers. So this is a big market, and such huge agreements, they don't happen overnight. They need a lot of groundwork, and there's a lot of laws and regulation that needs to be put in place.
Doctor, how do you, in regards to the previous years before the 25th of January revolution, do you believe that the reason behind the cold relations with Africa was the political will, was that the leadership back then, former President Hosni Mubarak, did not have the political will? And do you believe that the current government, under the leadership of President Abdel Fattah al-Sisi, has a different perspective or a different view when it comes to its policies and economic policies in relations to Africa?
That's true. Times have changed, and to be perfectly clear, the economical policies are always dictated in one way or the other by the political inclination and some political motivation. So for the African bloc as well as Egypt, while a possible economical fit existed, there was no political interest in a way. What has rekindled the interest in Africa as a trading bloc, and I would have to say this this has a great contribution, was the Renaissance Dam, and I have to say at some point of time it was a crisis, because it did reveal that Egypt has gone too far away from Africa, that establishing political agreements was not viable. So I think the new administration has realized that, oh wait, I think we cannot even see eye to eye, so I think further economic cooperation will get Egypt back into the African formula.
Mr. Mohamed, can you tell us about the investment? Do you expect African investment to come to Egypt and Egyptian investors to start to invest? There are, of course, some Egyptian investors in Africa, but do you expect that to increase, to see more Egyptian investors investing in the African states and African investors come and invest here in Egypt?
The total trade volume currently, as of 2014, between the three blocks, the biggest trade volume that Egypt has is with the COMESA. It's $2 billion.
Which I believe is minimal.
Absolutely. Well, and I'll give you some comparative figures in order to give you what this actually looks like.
Please.
So there's 2 billion with the COMESA. There are about 300 billion with the South African Development Community, and there's around 300 million with the South African Development Community, and around 295 with the Eastern African Development Community. So we're talking about a total of $2.5 billion. Now, in comparison, and just to come to your point, if you look at the #1 trading partner of the 26 nations that we're talking about, comes China with anywhere between 60 to 70 billion in terms of trade volume. So, and then comes India at a distant second with about 30 billion. So we're only, and both India as well as China, they represent about 20%. So if they're combined 150, representing 20%, so basically looking at a market which is about $1 trillion. So it's 2 billion compared to $1 trillion. So it's a drop in the bucket. So I think we have some room to cover, and I think any upward movement from here would definitely be a score.
What do you believe should be done on the part of the government to boost this economic cooperation? And do you think that boosting this cooperation is a win-win situation for both sides?
Absolutely. Boosting this cooperation is extremely important because Egypt, from Egypt's perspective, Egypt will attempt to get a slice of this particular market, which is heavily saturated by the existence of Chinese and Indian business, but also there might be the room for furthering the trades. And bear in mind that most of the trade balance that we've talked about, for example, if we're talking about the Eastern Bloc, almost 50% of it is exclusively done with one trading and with one nation, which is Kenya. So I think there is a lot of opportunity, and as we have mentioned earlier, if the inclination of the government is there, if there's a will, there'll always be a way.
Mr. Shita, can you tell us, we are just a few days ahead of the inauguration of the new Suez Canal project, and we are expecting investors to come and invest in Egypt. Do you expect African investors to also come and invest in that mega project?
Well, it's interesting enough, and to see which nations would be interested. There are 2 or 3 nations which would have a solid interest in this. I mean, if we're talking about South Africa, by far the continent's largest economy, the one which have the propensity to invest, that would be one country to watch for, as there are a lot of investments happening in the nations in South Africa, in terms of a nation to watch for in terms of investment.
Sir, do you believe that the rise of terrorism and militant groups in Africa is a barrier or might hinder the boosting of cooperation?
I actually view it the other way around. I think that economic prosperity is counter to the existence of terrorism. Terrorism thrives in impoverished, underdeveloped area, which tends to give rise to people engaging in such activities and becoming easier to have recruiting grounds. Such, for example, is the situation that you have if you look at the east side of Africa, in the northern parts of Nigeria, southern part of Niger.
Boko Haram, Shabab fighters, like it's a very volatile region.
Absolutely, and if you make a quick comparison with the GDPs and the economic growth perspective of those nations, you see that you have a direct relationship. If you have lower economic prosperity, higher volatility, higher propensity to engage in such activities. So I think, for example, it's been something that Egypt has struggled with in the past 10 years. If we look at the same sort of slight turmoil that we would have in the Sinai Peninsula, we always talk about development as the answer to terrorism, to counter terrorism. So I think it is in my mind the other way around. The more economic investment and development that you do in those nations, the lesser terrorism that you'll ever have.
So, Mr. Sheta, are you expecting to see a real change in the Egyptian economic policy towards Africa? We are seeing that Africa is now a hub for many investors from China, from the West, but still we did not see any real moves by Egyptian investors, by the Egyptian even government, in order to start major investments in Africa, although I believe Africa is still a fertile ground for that.
Correct, but on the other hand, also to give investors credit, is not what I would call a cakewalk. It's not very easy to walk into Africa and do business for several constraints. First,
what are the major challenges there?
Corruption. Corruption comes at a very high position in terms of the barrier to trade with a lot of the nations, a lot of the African nations. So this is one. Whether there are investor friendly laws, or what incentives do governments have to offer there. So, albeit that Africa is indeed.
Is there any other country that can challenge us in bureaucracy?
Oh yeah, absolutely. Oh, absolutely. I mean,
more bureaucracy than Egypt.
Absolutely, absolutely. I mean, if you're talking about on the eastern sides of the, I mean, let's talk about the larger economies existing. South Africa, Nigeria. And Nigeria is really difficult. I mean, to get and several investors had this particular problem, is to specifically when you're talking about trade, to get money or to get payment out of a country like Nigeria is extremely difficult. Even in some what we considered more developed
sorry
nations.
Sorry to jump in here, sir, but on the other hand, if we look at a country as Singapore, for instance, it's easier to establish a business. It's easier than ordering a pizza.
Absolutely.
So why is this huge discrepancy?
Well, there's a lot of historical backgrounds to this. First, it's the and I understand it might sound interesting to bring this into the mix, but it's due to the colonial nature of a lot of the African countries, which have the majority of them have only gained independence in the past 50 to 60 years. There is a lot of ground that they had to cover in terms of getting investor-friendly laws, putting a lot of tax or investment incentives in order to attract further investors. So there's a lot of development that needs to happen before we can ask of our investors to come in and jump in. So what you really need to see is, as we have said earlier, the agreement is not going to come into effect until ratified by the Parliament of the 26 nations. So we're talking at least 2016, 2017 for this to come into effect. Meanwhile, there's a lot of work that needs to be done with what we eye to be the trading partners in Africa. For example, on the eastern side, we're talking about South Africa, potential here in Kenya. On the western side, we're talking about Nigeria. There is Ivory Coast. There is Senegal. So these are countries which do represent a lot of potential for trade. So we need to start ironing out what exactly do we want. The second problem away from laws is also there is the language barrier, and that's specifically, albeit that a lot of the western, southwestern African countries, they also present viable trading partners, but due to the fact that they're all French-speaking, it also represents a lot of barrier because not a lot of English is being spoken here. So what we are up against is first establishing the political will, then second, paving the laws to support the investment.
What are the most important incentives that Egypt should start to put in order to attract investors, as we are in dire need for major investment opportunities here in Egypt, in light also of the opening of the new major project of the Suez Canal?
It's really two things. It's stability and transparency. So stability, that means that you give whatever incentive the country is going to offer for these incentives or for these laws to be stable long enough for investor to create a plan. The last thing that the investor wants is laws that change every day. For example, simple things that we might see or the administration might see in terms of forming a budget, for example, increasing or decreasing tax brackets. Well, in the last installment of the budget that the Egyptian government has done, when we looked at reducing the tax bracket from 30% to 22.5%, now they did put a caveat on this, that this is going to last for 10 years. So, I mean, investors, they're happy to see things like this, to see that there's a long-term particular stability. The second part is actually transparency. They need to understand exactly what are the investment incentives that they're about to receive. Regardless of what they are, regardless they're going to give them a land for free, going to give them tax breaks, whatever the investment incentives are, you need to be transparent. Because the issue which a lot of investors had post 2011, and in a lot of discussion which I had a lot of investors, they say, hey, wait, the rules of the ground are changing every day. We cannot commit to investing in a place where you're going to change the rules of the game as you wish. So I think what we are promoting now in Egypt is saying that Egypt has an economical plan. We're trying to put laws in place like the Unified Investment Law, which is going to facilitate things for investors, and we have laws and investment incentives which are clear to investors.
What about away a bit from Africa and speaking about or tackling the economy internally? For instance, we're seeing a sudden rise in the U.S. in the rates of the U.S. dollar versus the Egyptian pound, and also a fluctuating stock market. One day we find the Egyptian stock market winning 12 billion pounds. The other day it loses the 12 billion. This fluctuation and all this given, how does this factor in the Egyptian economy?
Right. So you've asked about two things here. The first thing is about the U.S. dollar exchange rate. The second thing about the stock market. So for the U.S. dollar exchange rate, what's happening is not a surprise. It's a planned move. It's something that we've been talking about since the beginning of the year.
Yeah, but I believe it reached a record high, right?
Absolutely, and but it's controlled in terms of this is CBE's, this Central Bank of Egypt's decision. What they have done is on Thursday of last week, they have sold at an auction dollars at 7.63. On Sunday of this week, they upped this to they sold dollars at 7.73, bringing dollar in banks at 7.83. This what we call a devaluation of the Egyptian pound is aimed to actually do exactly what we're talking about, which is actually attract investors and tourists, because it's going to make Egypt an attractive location. Same as what China is currently doing with the yuan. China is doing all the efforts possible to keep the yuan at a very attractive rate for investors.
But sorry for interruption here, Dr. Mohamed, but China is an exporter country, so it's of its best interest to keep the yuan low in order to have a competitive price in exporting.
Correct.
We are not a very much exporting country. We are depending more on imports, so that could affect us negatively.
It will affect us in terms of a rise in price, but it's one of those the egg or the hen type of things. So do you make it attractive for people to invest, or do you try to start something which is not about to start? So it's a very difficult situation. I mean, I have to say that a lot of the economic experts do not necessarily approve of this as a practice, but at least what is giving, from an pure economic perspective, giving us comfort that this is not happening at the will of a black market. This is actually happening at the will of the central bank. They are consciously doing this. Okay, so it's not that the black market is dictating the price. As a matter of fact, Egypt has successfully, although some of the measurements are draconian, but they have successfully controlled the black market, and the central bank sees it in the best interest of Egypt to see a dollar at a higher rate. There will be an interim suffering in terms of an inflation caused by currency exchange.
But
yes.
also, what if the government increases the austerity measures and lifts subsidies, and we see this dollar thing on one hand, and on the other hand, like the rise of electricity prices and the rise of fuel. Wouldn't you see this as an extreme burden on the regular citizens?
Well, let's look at what the government has looked for in the budget. Well, there are no major plans to lift subsidies in a way which will give rise to more inflation. For instance, if you're talking about fuel subsidy, because the biggest type of inflation which we had specifically in 2014, 2015 has been the one which has been brought about by the lift the ease in fuel subsidy. Now, this is not planned for 2015, largely helped by the fact that the global oil prices are at a depressed level. So we are at a fortunate position here. So we're not about to see further suffering. But let's just ensure the fact that the government will still have to have some social policies in place which should uplift or should relieve a lot of or provide some safety net for people who are going to be impacted by the price rise. But I just want to get back to the second point, which we've never addressed, about the stock exchange. So, having worked at the stock exchange at a larger part of my career, the advice which I'll give a lot of people: do not watch the stock market every day. Watching the stock market every day will only give you a headache. So what you need to do is invest for the long term. The stock market is not a casino. So what people need to do is at least hold position in stocks for 3 to 5 years and not watch their stocks every day and cry, "What I lost today, I won today." It's not going to happen this way. Most people need to commit for the long term. So I think, and this is not a problem because we are not yet a mature stock market, so people are locked into looking at stocks or following stocks daily. Following stocks daily is going to be a risky move. So we need to move from the fact of a gambling type of attitude into an investing type of attitude, which is usually 3 to 5 years.
Indeed. Dr. Mohamed Fouaad, the economic expert, thank you very much, sir, for your precious input and for being with us in the breakfast show.
Well, it's been a pleasure. Thank you.
And dear viewers, a short break, and we'll be back to resume the remaining segments of the breakfast show live on Nile TV International.